All right, what's going on, everybody? Welcome back to the channel. It's Millennial Trades. It's January 2nd, 2023. I am so happy that we can finally say that. It's going to take some getting used to actually writing that, writing the new year. I tend to, if I have to write it, I get caught up in the last year, so I'll have to make a conscious effort. But I'm glad. I'm just glad we're done with 2022 because, I was very blessed in 2022 in many different ways, and I had a lot of great experiences, but 2022 brought a whole lot of problems that I think all of us are hoping we can overcome this coming year. So obviously the markets today were not open for the United States because the Federal Reserve observes the New Year holiday up until the 2nd. So most of the banks were closed and the New York Stock Exchange was closed. But Europe is up. So on a good note here, like we can start the video on a good note. European stocks are up nearly 1% on the first trading day of 2023. So we'll have to see what happens tomorrow. I will not be the least bit surprised if we get maybe a little bit more of an extension of that rally. I mean, if you saw the market action from Friday, it looked like we were going to go down, and then, there was like a 60-point rally, I think, on the, maybe it was the NASDAQ. All of them rallied in a pretty substantial way. But yeah, if you go and look at the charts, go look at the price action. That was pretty crazy to see that rally. Where did that come from? Was that just optimism going into the new year? Was it market manipulation? I'm not sure we'll ever really find out. But we could see an extension of that going into this next week. But long term, thinking about a month from now, 3 months from now, 6 months from now, it won't surprise me at all if we see even lower lows on the NASDAQ, the SPY, the Dow. Like I said a couple of times, I always bring this up, but Jamie Dimon, maybe a month or two ago, said that it would not surprise him if we correct another 20%. So obviously people are hoping that that doesn't happen. But then again, it would provide a lot of opportunity. And as bad as things are economically and financially, I think we're going to see a lot of new opportunities presented here in the United States and throughout the world. Some other big news going back to the European markets is Croatia joined the EU starting today officially. So their currency is now euro, and they have basically an open border policy with the rest of the European states. And this is kind of, I guess you could call it globalism. And they refer to it as the bloc, which to me it just sounds so commie. The Euro bloc. The economic bloc. That's what they want to do over here in North America. That's what a lot of these trade agreements are about. The NAFTAs and stuff. They want to make Canada, the United States, and Mexico just one big economic bloc. We already have an open border policy, so all they would need to do is, switch us to some sort of a currency that could be applied to all three states. I'm speculating a little bit here, but we're seeing the expansion of that sort of globalist policy to, they're getting closer to something that resembles a one world global currency, right? But congratulations to Croatia now that they've joined the EU. Christine Lagarde, she's basically the Jerome Powell of the ECB, the European Central Bank. She spoke in Croatia today, I think, or it might have been yesterday. No, it was probably today. What's today? Tuesday? No, today's Monday, so it was probably today. But I was reading this article, and she was telling Croatia that they need to focus on getting wages down because she claims wages can also be inflationary for the rest of the economy. I've heard a lot of people like Peter Schiff and the alternative sources say that wages do not cause inflation. What causes inflation is expansive monetary supply, and I would tend to agree with that on the surface. But, what do I know? These people are in charge for a reason, and I'm not. But that's what Christine Lagarde is saying. And the Fed has said this too. Jerome Powell has said that they need to focus on the wage inflation because the wages are going up too fast, right? And this is what doesn't make sense to me as a layperson. the wages already don't keep up with the near 10% inflation like in the ECB. And she claims the target, Lagarde claims the target is 2%. I don't know if they have a 2% average target like the Fed does, but to go from 10% to 2%, that sounds like it's going to take a little bit of time. So the wages don't keep up with the inflation. The wages don't keep up with the inflation either in Europe or here in the United States. And so they talk about how the inflation is too high, much too high, is what Jerome Powell says. Inflation is much too high. Yeah, well, obviously. And I think we ended at core inflation was like, I think 6% on the year. So way above the Fed's target. They need to bring all of this down. But then they tell us that the wages also have to come down because wages cause inflation. So if you are playing the wage game, which I'm going to try never to play that game again, sometimes things happen, circumstances come about, and you have to play the wage game. But for those of us that are playing the wage game, we're never going to win that game, right? That game is always going to be rigged to, just pummel you down into the depths of economic depravity. And it's unfortunate, but that seems to be the global agenda. So for people out there that are playing the wage game or relying on the wage game, which is very risky because, you never know. You could get fired. You could get laid off. Peter Schiff has talked about mass layoffs possibly coming now that we're into the new year, because a lot of these companies didn't want to do it right around the holidays, so they're going to wait until after the new year. So we'll have to look out for that too, more job losses. But it's risky to just rely on the wage, rely on the employer, especially in this kind of economy. And if people are not investing or trading or just finding alternative sources for, their own financial stability, how are they going to make it? Unless they have like a 6-figure job or something like that. I mean, that's one thing. Most people don't, right? Most people are either on a wage or they start out like $30,000, $40,000 a year. And I'm very concerned for this country. I'm very concerned for all of the Western countries. And, now we have with this border issue too. I mean, this is, in my opinion, going to be inflationary, right? Because you're going to have too many people chasing too few goods, too few jobs, this kind of thing, even though there's supposedly an oversupply of jobs right now. So I do think 2023 overall is going to bring a lot of devastation. All right, I think we're going to see this two-tiered system expand even more. And we got to come up with strategies on our own to combat that. For me, it's trading options right now. I'm just laser focused on this. And I'm going to take steps to reduce risk more in 2023, whether that's buying contracts a few weeks out. If I do take overnight risk, not having it be more than $1,000 worth of risk. You could also, put certain kind of percentage stop losses, right? Like if you're down 30%, you just exit the position. There's all kinds of different risk management strategies out there. And some of them I'll have to kind of tinker with and play with. But that is that's my goal for 2023 is to continue building this account, to continue paying my bills through trading, and to continue to get better at this. I'm going for $100,000 this year. All right. I'll put it out there like that. I think it's doable. And I think setting big goals like that is better because even if you don't reach them, like as long as you're shooting for the stars, you'll probably make it to the moon if you're determined enough. And so, if people are not looking for alternative ways to make money, I'm very concerned for Americans. I really am. So I don't think I can provide, a lot of financial education, but maybe I can inspire, maybe I can implore people to look into things that they otherwise would not have looked into. And, maybe it'll give them some ideas. So we also have the FOMC minutes coming out. Sometimes that causes a reaction. I think that might come out Wednesday. It can cause a reaction. We already know what they said because they had the FOMC meeting a couple of, when was that? It might have been like 2 weeks ago now. But the minutes come out, the transcripts, and the traders will be looking through it, and the algos might be going crazy for no reason at all. So I'm going to try not to get caught up in that. You shouldn't get caught up in that either. So yeah, it's going to be a big week. I mean, there's a lot of things on the calendar. We'll just kind of go with it day by day as they come. But tomorrow, let me just see. Tomorrow we got S&P Global Manufacturing PMI. They also have soon. They have annual GDP estimates coming out too. You've got some Treasury bill auctions tomorrow as well. And then on Wednesday for the U.S., let me see here. You got a lot of mortgage information coming out on Wednesday. So some of this stuff, even though I'm not in the housing market, I got to pay attention to it a little bit because, these numbers affect where the stocks go, at least short term, a lot of the times. Here's another headline I found too. Speaking of the bond market, the U.S. Treasury market just suffered its worst ever annual loss in 2022. Worst ever annual loss. And it's been an unprecedented year for these treasuries. You're talking about the yields, the gains and the losses on the yields. I mean, these have been very unprecedented swings. You had rallies after Powell downplayed the outlook for a 100 basis point rate hike. That was back in June. In September, we had a big sell-off because of the UK bond monetary collapse. That happened. You had another big rally led by the UK bonds on October 3rd. And, it's just been an unprecedented year in the bond market. One of the things I'd like to look at more is bonds, at least just tracking them, understanding the yield curve inversion. And the yield curve inversion is still not good and probably won't be for some time because people they don't want to invest in the short-term bonds. They're willing to maybe invest in the 10-year or the 30-year treasury, but the yields are a lot lower on those. And the fact that people are selling the shorter-term bonds, like the 2-year, right? Well, that means the yield is going up higher. So just unprecedented. And the Gregory Mannarino says this all the time, but the stock market, the commodities market, all of these things, even the crypto market, they're all derivatives of the debt market. They're all derivatives of the, what's going on in the bond market. So we have to pay attention to that first and foremost, because when you see the yields rising, when you see the prices on the bonds getting lower and lower and lower and just selling off, a lot of the times it can bring the other markets down with it as well, or it could make commodities go the other direction. Commodities as well, especially, our favorites, the metals, right? Let's see. We got silver right under $24, gold at $18.23, copper at $3.80. Definitely going to continue to stack, going to continue to follow the commodities because generally if we're going to be investing in stocks or at least we're going to be making, long-term bets on stocks, we want to see commodities kind of trend down. But there's just so much going on with the geopolitical situations, and there's more of those that are arising. But besides just the Ukraine, you've got geopolitical situations in Kosovo. You got a geopolitical situation in Turkey with Syria. Turkey wants to take tanks into Syria and start making incursions into there, and both the United States and Russia doesn't want Turkey to do this, but Turkey's kind of could be a wild card. There's China as well, China and Taiwan. We just have to be open to anything. There could be a black swan event that happens at any point in time. I know Bill Gates is trying to talk the global community into COVID lockdowns again. Something like 700 million people in China have COVID, and we find this out after the Western media pushed and the Western governments really pushed for China to back off on its extreme measures to combat COVID. Well, after China backs off, then we find out here in the Western media that, a population twice the size of the United States is infected with COVID right now. And they can fly, anywhere in the world. And in Italy, I think they were screening people. Like 50% of the Chinese passengers had COVID, tested positive. You've got some European countries that don't want to do any screening. They just want to take the chance that, maybe the Chinese virus infects their country again. And Italy was like the epicenter besides China, Italy was like a huge epicenter back in 2020. So that's one reason they want to, screen all these passengers and make sure that they're taking precautions. But, Macron and France, I guess they just don't care. Here in America, I guess they don't care. Biden says they're going to screen people from China, but you just never know where these diseases could come from. I don't think they're screening anybody in El Paso. And El Paso is starting to look, it does. It looks like Skid Row. I think this is another thing I'm really concerned about moving forward is, all of these new people coming in. Once they get established here, and this is what the global elite understand, once you establish people here, there's no way you can send them back. Once they start their families and their careers, there's no way you can send them back. So they're trying to get in as many people as they possibly can, but there's not enough resources to really take care of all of them. Because you could see this in El Paso. They have to turn Catholic Church into shelters, but there's still thousands of people all over the streets, just sleeping all over the streets in El Paso, and they're being moved to other cities. So I think we're going to see a lot of cities in the United States continue to fall. Right now, Virginia has a Republican governor, even though we have a lot of very left-leaning Democratic cities in Virginia. I'm really hoping that, the Republican state, at least at the state level, the governor level, can manage some of these risks that are coming about. But places like California, Washington, Seattle, these places are done. El Paso, they're done. Probably most of Texas, if this doesn't stop anytime soon. I saw a video just an hour ago on Instagram. Within like 30 minutes, 600 people had just passed over some town in some border town in Texas. So this is going to get worse. It's going to cause economic and financial difficulties for you and me as Americans. Europe has their own problems, obviously, with these same kind of issues. But we can't really fight these plans, right? If this is what the financiers want, we can't fight it. And I don't think we should look to political solutions because I don't think they exist. We're talking spiritual solutions and financial solutions, and the financial solutions would come about because of spiritual awakenings, obviously. So you have to think about all of this. There's so many components here, and I don't want to trap myself like on a hamster wheel fighting something that just is like a never-ending battle, fighting something I can't win. There's no point of even talking about it, right? There's no point in talking about limiting any of this because you can't. There's no way you can. And somebody's funding this, right? I haven't done recent research, but, we could look into the Open Society Foundation and this kind of thing. Somebody is financing these bus loads of people that are coming into the Western countries. So anyways, getting upset about it, we just need to find solutions for ourselves. How are we going to, if they're bringing all these new people in to work all the menial jobs that Americans supposedly don't want to work. We don't. We don't really want to work menial jobs, right? How do we find ourselves in another position where we can kind of, because they're going to bring the wages down. Inflation's probably going to get worse. All of this is going to be inflationary. And the whole idea that the Fed controls the economy or, controls behavior, that could be challenged because, they claim, well, the higher interest rates is going to slow down growth, it's going to slow down the economy, which will help get the inflation down. But for instance, I was in the market for a new car. I actually just picked one up today, the Ford Fusion. Unfortunately, on New Year's, my Hyundai Sonata was stolen. I just woke up on, I think it was New Year's Eve, and the car wasn't there. So it took me 5 minutes to get through to 911 too, by the way. So if you are in an emergency and maybe it was because it was New Year's. I've never really experienced that. The handful of times I've had to call 911 before, but 5 minutes before an operator picked up the 911 call. That's another thing to consider, security. If you're in a situation, you are on your own for the most part. And the officer came by maybe a half an hour later, which was pretty good timing. But he basically said they get 10 to 20 of these stolen car reports a day. It was just his job to go around and fill out stolen car reports. He said he was on his third one by the time he got to our place. So, if you do call 911, especially in these big cities, you are on your own. From my experience, at least for 5 minutes. If somebody's trying to stab you or shoot you or rob you or, God forbid, something worse, you're on your own, at least for 5 minutes. And that's just my experience here in Virginia. Lord knows what it's like in California. You might wait 10, 15 minutes before you even get through. And then who knows? It could take the cops, another half an hour to get to you, right? Because there's so much crime. The crime is getting worse. But going back to the interest rates and what the Fed, whether the Fed controls the economy or not, I was in the market for a new car. It didn't matter to me whether the interest rate was 3% or 6%, right? My interest rate is closer to 6% because of the rate hikes. But I don't think normal people don't buy cars or homes or make these big financial decisions based on what the Fed is doing. Most people don't even follow what the Fed is doing. Most people make these decisions because they're in need or they're in the market at that moment. Are there some wealthy people that can afford to kind of put things off and wait until maybe interest rates come down or prices come down? Yes, but the majority of Americans don't think like that. So I'm not... Just from this whole experience of having to, being forced back because of high crime and property crimes and being the victim of a property crime, I was forced back into the car market. I'm not convinced that the Fed really has that much control over consumer behaviors. So who knows if these rate hikes are going to actually bring the inflation down. I know people are claiming we're going into disinflation and then we will be going into deflation. But, as far as I'm concerned, it's a 50-50 chance that we could see inflation rates go even higher. Maybe not on everything, but maybe on things like energy and food. Energy is going to become a big one too. In fact, I want to start stacking up on candles because you could heat a room. I heard this on the Adapt 2030 podcast, and it makes sense, but you could heat a room with 5 or 6 candles. Put them around the area where you're sleeping or whatever. If something were to go wrong, power to go out. I mean, look at Buffalo, right? I mean, people were freezing to death. I think they lost 40 souls in that Buffalo storm. They're going to continue to tell us that, global warming is a thing when we're going to see these winter storms, rainstorms in California. All this stuff is getting worse. When are they going to have to backtrack and start calling it global cooling? That's what you guys let me know in the comment section down below. When will they, because they went from global warming to now climate change. I think they're going to have to go even further and call it global cooling because everybody can see this. We're going into some sort of mini ice age. I think the fact that they call it global warming is just part of the psyop to just completely confuse people. I know I'm kind of going off in several different directions here, but as a consumer and as somebody that I need to prepare more for my financial future in many, many different ways. These are the kind of things I'm paying attention to. The Fed interest rates, I don't think it's going to affect consumer behavior that much. But then you have the whole inflationary aspect to this. We don't know where this is going. With the wars and the geopolitical issues. I mean, some of these European countries too, they've got policies where they're banning, basically gasoline fueled trucks, or at least the manufacturing of them or the importation of them. So this whole going green thing, I just don't think the infrastructure is there, and it's very, very dangerous. There was a couple of videos of Tesla drivers, and once the Tesla gets below a certain temperature, you can't charge it. The charger it won't work once you're below a certain temperature. So all these people that are buying Teslas and electric vehicles and stuff, they're going to be screwed. And look at Tesla, look at Elon Musk. The whole thing's a mess. I mean, this guy went from like hero to zero, what feels like overnight. I'm not putting money in Tesla. You kidding me? I can get into all that later, but this is the world that we have to deal with in 2023. I'm trying to encapsulate the sort of the long-term vision here and what we can do to kind of combat this, not combat it, but what we can do to survive it, because there's a lot of forces here that are just way beyond our control, and it involves the banks, it involves the governments. I'm reading this book, Too Big to Fail by Andrew Ross Sorkin. Extremely interesting book, but he lays out in detail the connections between the deep state, the banking cartels, and the Federal Reserve. Just lays it. It's a revolving door up there, a revolving door. The Treasury Secretary is for a few years, the Treasury Secretary came from the Fed, right? This is Janet Yellen. You have Fed people that go to Goldman Sachs, and then Goldman Sachs people that go to the State Department, or people that trained in the State Department or in the intelligence community end up in banking or the Federal Reserve. I'm telling you, it's a revolving door. And these books, you got to read the literature. They're not going to come out and tell you this on CNBC. It does take a little bit of work, a little bit of digging, a little bit of annotating, but it's all laid out here in this book that I'm reading, Too Big to Fail. You can see the deep state connections to the financiers. And a little interesting fact about Jamie Dimon. They claim he claims to be Greek, actually, which my assumptions would not have been that he was Greek, but apparently he's Greek. He's married to a Jewish lady, but he's his grandfather's name was Papa Demetrio, which does sound Greek, and they changed it to Dimon when he came over, I guess in the 18 or early 1900s, and because Jamie Dimon's always talking about going to Greek. If you listen to his interviews, he's always talking about going to Greek restaurants, and so I started looking into it because. I've heard him say that, and then I saw in the book that he, one day he was dining at a Greek restaurant. Hank Paulson gave him a call. So I was like, Jamie Dimon's always dining out at Greek restaurants. Well, I started looking into it. Apparently, his grandfather was a banker in Athens. So you'd have to go even further back into their history to really figure out what's going on here. But some of his family came from Turkey as well. The Greeks lived in Turkey. And so I just thought that was very interesting. Jamie Dimon's a character that just interests me because he's kind of witty. He's funny. He's one of the only billionaires I can think of off the top of my head that didn't start his own company, or he's not like a technocrat or a technologist. He's an employee of the bank J.P. Morgan and became a billionaire. So he's an interesting character. And he's witty. I like his comment about cryptocurrencies being pet rocks. Becky Quick seemed to like that too. It was a funny comment and true. But he's kind of an open borders type of person, definitely an internationalist, a cosmopolitan, whatever you want to call him. I'd have to do some more deep dive into him, but that's as far as I've gone back. Is his grandfather was a banker in Athens. Okay, so they claim Greek, and I'm half Greek. I'm Greek Orthodox, spiritually speaking. So, yeah, I don't think he's Orthodox. And he did not convert to Judaism either when he married his wife. But if you guys are interested in Jamie Dimon content, let me know, because the guy, he fascinates me. And maybe it's just his charisma, maybe it's just his success, but the guy fascinates me. Even before I found out that, he was Greek. So, yeah, that's pretty much everything here, guys. We'll just have to wait and see. One can only speculate how any of this is going to play out, but this is a dangerous game we're playing, and we're forced to play it. We have no other choice. So you guys let me know what you think in the comment section down below. Follow me on Instagram at Millennial Trades. And as always, until next time, I'll see you on the next video.